Welcome to TradeTheNBI.com. This is Isabella. Just kidding, it's John. This video report is for June 15th. And here's Bobo.
Well, thank you for that, Isabella. Kind of an auspicious turnaround from what we've been seeing. We were looking for a little bit of softness up here at the peaks, and sure enough, we got it. Started to get also the declining shakeout on this significantly rising. What we had here was the steel crossing below cyan, and that usually produces a little bit of softness in between. Nothing dramatic. We weren't expecting a big move of any kind, shape, or form. From an NQ standpoint, it's still way outperforming. Nothing really to add about that. The euro situation was an interesting one. We never breached that 38%. We talked about how this wasn't likely to do anything but retrace the lows. Now it's done so on a higher shakeout. We'll see if it's able to maintain this base. If it breaks down into a new one, that would be quite dramatic. We didn't dip below the red line, so there's a good chance they should be able to keep within this. Well, we're at the top end of the broader range, which goes all the way down into the 112, 111 range that I've had for quite some time. Once we saw central governments stop, well, at least the U.S. stop intervening, it's been a steady decline in the euro. And we're seeing that there is significant growth in the U.S. at the same time. The EU doesn't even know what it's saying, which is part of the problem why they're really not getting any traction. TLT right up started a new twist here, going back up with the shakeout. We've had pretty decent, and this is just, again, always bounces on a support kind of situation for, if you're going to move money out of the market, you got to put it somewhere, and treasuries is usually the place where it goes. Oil still doing this slow, steady creep up. It's not anything dramatic. The reality is, though, we still expect that to come back down to the lows. It is following that ABM reset that took place. It's just been a slow move. In fact, barely getting to the just above the negative 13.5 now for the red DOC, and that doesn't usually bode too well. The key right now will be this intersection here of the green and cyan, failure to cross above, or likewise the rejection and the cyan moving up, green going down. That's when I would expect a much more significant drop to take place. Gold, it's trying. It's just not doing so great. Just caught in this perpetual stagnation. And it's interesting because we can see what is happening with real inflation and those kind of things, but it's really not showing up so much in the general market as far as gold goes. And inflation is one of those little creepy buggers. Obviously, the Fed raising rates continually. While expected, it still puts a burden both on the federal debt as well as borrowing in general. So it's designed to slow the economy and really put a hamper on things. Are they going to do it too quick? That's always been my concern. I still think they're going a little faster than they need to. But, they have this terror fear of inflation. Well, let's just flip to the 5K. So we ended up with some white candle setups here. We started off the day with one of them, and in particular was pretty weak shakeout setup. Didn't get a reset below the orange below the red, and that created new lows. And so put that marker in right there, that first bar going down. And so when we started to spike back up through this, on pretty strong shakeout, we got the gold actually rose above 50% and then continued to the 100%, which became a very attractive 21-point range from that high to low. And in this particular case, though, we were talking about this one in the Skype chat, where I tend to like when we get the orange break up through. Now, I marked this one because this would be something that not many people would take. It's a positive extreme. So what it says to me is that if I'm going to attack up at the high, at least I know I've got retrace of the low built into there somewhere. Now, you can tend to make new highs on that. I just like it from a little bit of a risk reward if I can see that there's, any kind of peaking. I haven't made new highs, that kind of broader setup. I just sort of marked it there so that you can visually see it. It happens to be represented by that little red dot there. But what became more clear, obviously, is the giant DOC spread, but it was the very next bar that comes through right here when you start to break down below the cyan. But even more critically, I've talked about this one. This is that triggering of the opening of the mouth of the snake that we were calling, where the orange moves above steel, steel dips below, where green is also above orange. Tends to be a fairly decent setup. Now, obviously, you want to see cyan move above red and clearly move below, unlike this next bar here where the steel moves below cyan and it gives you the full trigger at that particular point. I happen to take advantage of these up at this setup because from a broader target, I had two setups. One, at this particular point, I'm looking for a DOC spread. If I get one, I'm knowing that I'm looking for a 50% move. Broader side, I know that within the next day or so, I'm going to be getting a full retrace all the way back to my 2774. So the opportunity is to take some gains on this, look for any kind of bounce to be able to attack it. Now, it played out exactly like that. Now, you start getting this dip and it looks like it's going to keep going down. The difference was we ended up making the matching lows right here, and we started to get the improved extreme histogram, and then the shakeout turned around, and that just led to a nice little bounce. In which case we kind of just traded back and forth, and then we got the inverse play here, an unusual one where the gold showed up above the 50%, and like this one that was below, it traded inverted to the overall setup and headed more towards the 23. It did pop back up overall, but when you're playing within this broader white candle setup that results in these retraces, you often get a mix of back and forth. I've been in this one now since the beginning. Still haven't reached the full 74 and a quarter. That's we're 3 ticks away from it at that particular point, so it's almost there. And from this one we can see the full entry was all the way back up at that 93, as we were talking about. And when I'm doing something like this, though, that's a little bit outside of what our normal readings are, usually I'm going to have a stop that's at just above the highs in this particular case. Or if I know that I'm going to add into it, this was a small entry, so it was one of those where even if we had made a new high, I would have been able to add into it. What I'm looking for pretty quickly after this kind of setup, though, is beginning of the reduction of shakeout readings. It was consistent, though, and this is an interesting one because we were making higher highs on higher shakeout. We had just reached bit overdone with the positive extreme, and it gave enough of a little bit of a retarget. But you can see even for 3 bars, it even still made it all the way back up to the high 2 bars later before the DOC spread hit. And once the DOC spread hit, it just cascaded pretty quickly. Oh, well, as we're talking here, we're just about to reach that full target. Well, it actually did do it right there. Man, you gotta like that. In fact, just go ahead and put an order in. That was easy. Went right through it. So let's zoom in as we get a little closer. And not hard to see within some of these setups we ended up with. Again, these retrace bounces that come down to where the cyan and red meet and then break away. And sometimes this is what happens with a lot of shorts, and a lot of people kind of panic through them because they go sideways, and it's like, oh, this isn't doing anything, and then boom, it just sort of collapses. Now, of course, you can see the big D here, which is looking for those breaks of the 50% to short. It does take those and continues to collapse from them, but Sometimes you just have to be patient with it, and in this particular case, you just got to sit with that stop that's higher up there, especially knowing you have this bigger target. And even if you're just looking for the zero on a breakdown from the readings, that's fine. But in this particular case, we had a very significant one, and even if you waited into this, you're still looking at getting in at the 86 with the 74. It's still 12 points. Can't really object to that kind of setup when you have a pretty fair confidence that it's going to do it. I mean, we're talking an 80% range that it will retrace that over a couple of days, particularly if you're able to get in near or at highs. And I think it's very effective and something that excited to put into actual strategy form. It's more of a longer term within a short term chart, so it's kind of a little bit tougher from a strategy description when we have so many other intra plays between those kind of broad setups. But it's worth noting, and definitely we'll have that special candle set up for next month, so you'll be able to see when it happens. I don't know that I'll have it in white because that typically was the MBI. I just happened to do it for within the testing phase so that it's easily identifiable. But it's hugely powerful, and that's why I put it on the Skype chat and that, because it's definitely something worth noting. And I mean, then obviously to see it actually fill right as we're talking is always interesting. But nonetheless, fits right within what we're over in general talking about, the broader market having a little bit of weakness. Pre-market here, we're already off 14. All we've done is just backfilled into the space, and we're going to be testing ABM ranges. In fact, I should put those back up for you real quick before we close out, because we're about a point away from the ABM yellow, the DO fast right there, and then you have the middle ranges going all the way through. And I think the critical one then becomes that 2753, because that's the ABM green, and a break of that likely to come back to this 50% kind of concept down in the low 80s. So worth paying attention to, because it could happen fast. Once it does break, there will be a lot of liquidity, and you have to be prepared for that. As always, though, trade well, and we will talk again later.